That's your money saying it's time for a McDonald's run. Because with new McValue at McDonald's, you get more than you expect. Like buy a 6-piece McNuggets and add a McChicken for just $1. Your money says let's go. Get more than you expect with new McValue. Prices and participation may vary. Valid for item of equal or lesser value.
Reality radio for a really great future. We're talking real money.
All right, let me see if I remember how to do this.
It's that switch right there.
Yes,
yeah,
the
and
micro,
then you
yeah, and then talk into this part.
Yeah,
correct?
and then turn that a little more for me. Yeah, okay, thank you, appreciate it.
It's been a while.
Yeah,
wow. I almost forgot. I was going to go back and take remedial radio classes.
I had to have somebody drive me here. I couldn't remember where the studio was. So I'm driving around. I think, is it over there? I think so.
Just look for that needle. Yeah. That needle that points up in the sky.
That was the problem. I think I ran into the needle, then it started moving. Anyway, so.
Hi, everyone. Don McDonald, Tom Cock, here to do what we do every now and again, except when preempted by the dogs. The doggies, the puppy team.
We're on this week and we're on next week. That we're sure of and nothing else.
2 in a row.
Yeah, I know. Shocking.
So take advantage of it. Take advantage of our presence to call and get the only straight, honest direction about investing and dealing with money that you're going to find this weekend. I'm just telling you. The rest of it is best ignored. And you can call us and ask us questions for absolutely free nothing at 855-935-TALK, 855-935-8255. And all I can say, Tom, is I am sure glad the guy who came on that other station after our show talking about indexed annuities isn't on the radio anymore.
Yeah, I heard he's off. My guess is he sold enough of those, he just retired.
Yeah,
made enough money, like, don't need to do this anymore. Why do I want to work every Saturday?
This was a guy. It's like, this is one of our favorite jokes, because after we did the show, we would ride back to Bellevue together, and we would listen to this other radio station where a guy literally read a script. It's like, hello? Today, I want to talk to you a little bit about investing and how dangerous it is. And if you don't do this right, then you won't be able to leave any money to your heirs.
Yeah, because those heirs are very important. You know, if you have them, you want to keep them, you know. And so, yeah.
Are we talking about going bald, or are we talking about rabbits?
No, that's right. Heirs. He said hairs. I'm thinking heirs, but okay.
He did.
Yeah,
he said
hairs. I know.
And then he takes the half-hour script, and they replay the exact same thing for another half hour.
I don't know if that's sad for him or sad for the local state of broadcasting.
I got to tell you, that for me, he can take it. He's a big boy, and he makes a lot of money on his stupid commissions. What it says, though, is a lot about the state of the radio. That if you have enough money, you can read a bad script and get on the air.
You want to try it?
Okay, go ahead. Your turn.
Okay.
Read a bad script. Tom has something he wants to share.
Come up with something.
Well, right now, no, share the cheese.
Oh, you want to go straight to the good stuff?
Since you've got the script right there.
Oh, I read these things. You know, we've had a couple of weeks where we weren't on the air, and so a lot of stuff piles up that we don't get to share with you. And some of it, by the way,
cheese.
I want to thank the people that came out this morning, because I talked to a couple hundred people at Maidenbauer as part of the round table. Which they didn't. They had square tables, by the way. So I thought, how can you call this the round table? Nice group. Because we're 10 years now into the bull market. Is that what it is? Like 10 years?
Yeah, bull. Oh. That's a long bull.
And that's just too risky for people. I can't put money into stocks after it's gone up for 10 years. You got to find some other angle, right?
Sure. Yeah.
So there's a private... I would say something bad about Italy, but I don't want to. A manager of Italian private debt funds run by Amundi, A-M-U-N-D-I. I don't know how to
I'm going to go with whatever you want.
Yeah, they have decided, because they don't want to invest in stocks and bonds, they are setting up a fund that will lend to people that make Italian cheeses and hams. Now, if that sounds a bit esoteric, the article went on. This is from the Journal earlier this week.
Oh, at least it's a ham and cheese fund.
Exactly, because, you run out of the stock doesn't do well, you got something for a nice sandwich. But if that doesn't, how about the Swiss fund? So then they started looking into other people that kind of invest in alternative things. The Swiss fund manager GAM, they're now investing because they're worried about the market. Ukrainian wheat, South African maize, not the type where you get lost, German power supplies contract, Chinese glass, and they believe in U.S. cheese. Now they're they're going with the U.S. cheese. Now, I don't know how the tariffs impact all this, but
I was just going to say that may have been a good move because I heard on the Como Morning News from right out of the mouth of Manda Factor.
Yes,
and everything she says is true.
That's Bible.
That Parmesan cheese was just going through the roof. You're going to have to,
So I should be stocking that up?
Parmesan, you should be stocking up. Should have been investing in it.
The holidays are just around the corner. Yeah, all right.
So now you're going to have to go with that American Parmesan.
I think I'll just eliminate Caesar salads from my diet. Then I won't need the Parmesan cheese anymore, right?
You do love your
I do.
Caesars.
I love Caesar.
I am because of the ham and cheese fund. I'm thinking about an Italian bread fund.
Don't do it.
855-935-TALK is our number using that Ukrainian wheat. 855-935-8255. It's a multinational sandwich. And
you're taking a big bite. You're
Tom and Don are talking real money.
Do you know what your investment risk tolerance is? Take our free no-obligation risk quiz at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
And I want to apologize. I want to apologize.
Yes.
I actually followed my script to the letter, but I put the wrong letters in. And so the Lunch Ed event that I was talking about with Barb Devereaux I did say at one point it was November 6th, and then I said it was March 20th. But it really is November 6th again.
We'll have to do it on March 20th. You already said that.
Pretty much. Yeah, I think we're committed to that now. And
by the way,
I want to welcome you all.
Yeah, go ahead.
I want to welcome everybody back to one of the cheesiest shows on radio, Talking Real Money.
Yeah, it's about you. By the way, I think if you call, you get a free book, right?
I forgot to mention the free copy of Don McDonald's financial physics book.
We got that young man just waiting out there to take down your name and number to get you a book. Need something to do.
So
I think he's taking a nap or something. He's tired. He had to get up at work at like 6 o'clock this morning.
He did?
Yeah. He had to come down to the round table.
Oh, yeah. The round table started that early?
We had to be there at, I think, 7.
Oh. Wow. Well. Yeah, but for you, that's like the
sleeping in. But noon. I know. But for him.
Hey, the number though, if you want to call and get the book and ask us a really important question about cheese or any other investment, 855-935-TALK, 855-935-8255. But when you finish that up, Tom, I would love more information on how I get into that ham and cheese fund.
Yeah, the ham and cheese. Yeah, I mean here's okay. So the article is built around this fund that's going to invest in the makers of Italian cheeses and hams. And here's why. Here's what their explanation. I just find this fascinating. One reason investors are going so far afield is the potential today for greater risk and diminished returns in mainstream markets. Now, what's that telling you? That's telling you that, well, there really isn't much more upside because stocks are trading near record high. Well, they have no idea. And they have no idea if risk is higher. That's complete speculation. So the idea here is he's putting the money into this. It's a very small fund, by the way, $126 million. And you know what yield?
That sounds like real money to me.
Well, I know, but you know what yield he's trying to get to? You want the yield?
Why?
6%. I mean, in an interest rate environment where a 10-year is paying 2%, I mean, that's so. You think you're taking a lot of risk to get 6%? Yeah, a lot.
Well, it's commodities.
Yeah, well, yeah, that's true.
Wait a minute.
That's
I'm
true.
now confused as to how you get a dividend.
Well, you get paid out in ham and cheese, and then you either eat it or you reinvest it. In my case, as you can tell looking at me, I eat it. That's the problem. I should be reinvesting it. But
so you get a little envelope
shaving it right off
with
the
a couple of slices.
Yeah, exactly. I take the prosciutto. It's always good.
No, here's the spuriousness of this argument, though. This is so. I love this statement because I hear it from people all the time. I heard it from somebody this last week, an an acquaintance. He said, "Oh, yeah, my broker gets me out when the stock market is near new highs like now, and then gets me back in later." And I went, "Yeah, I'm not even going to argue with you because you're such an idiot." But he said, "Well, with the market at all-time highs, the market has consistently been at all-time highs since there's been a market."
Okay, so if that's true, you're right with the market at all-time highs. So then what should you do? That means then you should wait till the market goes down by 20-25%, right? The markets.
Should you?
Yeah, and how many? I want to know. Show of hands. How many of you will then rush in and buy stock? Oh, I got to get in now because the market's down 20%. Nobody, because we know that nobody does that.
Well,
so it doesn't work.
Here's the other thing. That this is the big thing. Let's say in 2009, you stayed in the market for a while. You watched it rise 2010 through 2011. You're going, whoa, this market's like at new all-time highs again. I'm not going to go through 2008 again, so I'm going to get out and wait for the market to go down 20% before I get back in. Guess what you would be doing still? Waiting.
Yeah. That's why you shouldn't have a portfolio with cash. We'll talk about that later today, too.
855-935-TALK is our phone number.
Yeah, let's go to the phone. Matt, kind enough to call us. Hi, Matt. How are you?
I am good. Can you hear me okay?
We hear you loud and clear, sir. How can we help?
Oh, great, gentlemen. Unfortunately, I have been diagnosed with a terminal illness, so I do have a question about the monies that I have invested that'll go to my 24-year-old and 26-year-old daughter. And I'm trying to find out what's the best way to possibly set up a trust with them to provide the funds when it does happen that I unfortunately pass away. Currently, I have $1.3 million in life insurance, $800,000 in a 401k, and maybe $400,000 or $500,000 in real estate. So, what do you guys recommend? Or can you refer me to someone that could help me do something like that?
You could make the trust the beneficiary of any of those assets.
Right, but he needs to create the trust.
Well, yeah, no, and there's a number of people, and I don't know if I want to get into those people on the air and give names out on the air, but there are a number of people that could write the trust, and then those assets would simply go into the trust and then pay it out over whatever period of time you wanted to have it, or however
in
you
whatever way you want it paid.
So, but I'm trying. First, we're very sorry to hear that. But number two, so you're looking for a referral to an estate planner?
Well, a financial advisor or an estate planner, someone like that, to decide if I should just give it out all in lump sum to my daughters, or if it's wiser. I trust them with their money, but I think it might be wiser to have it divvied out over time.
Yeah, and that, by the way, I'll use my example. If I have anything left, it goes into a trust, and it is being paid out over time by the administrator, who happens to be my brother, who's a lot meaner than I am. He'll be a lot harder on people.
And another thing is
they're
often,
young.
No matter how responsible they appear, I've got 20-year-olds and 30-somethings, and if they were to come into a large chunk of change, they don't have the seasoning really to do the things that need to be done with it. And what you probably want to do is start them off right with the trust, with a good advisor attached to that trust, and then that advisor could then follow up with the kids, keep them on the right track with that money as it's getting doled out, so that they start to build wealth for themselves and their heirs. So I think the combination, I think you need both a good estate planning attorney and this is the trickiest part, because there are a lot of attorneys. Good luck finding an advisor who's not going to do stupid things with the money.
Well, that's why we have the list now back up at talkingrealmoney.com, right?
Yeah, there's a couple of firms up there.
Yeah, so if you go to talkingrealmoney.com, right? And how do you get to it on the
I don't know, I'm going to find it.
And then you go to that would be a place to start, because any of those people are going to have estate planners that they know and will refer to that they trust. That's the way I would do it. So you could start there, as Don said, and then with their help, find an estate planner that will write you a trust in the manner that carries out your wishes. Does that make sense?
It really does. I think they'd be overwhelmed at that age if they got a nice, large sum of money to do with it. So I think that's what I'd like to do. So thank you very much, gentlemen. I will go onto that site
And by the way, go to talkingrealmoney.com and click on the woman listening to headphones, and there's a number of stories there on advisors and how to vet an advisor and some of the advisors we suggest and all
Matt,
that.
we
Good
wish you
stuff
well.
there.
We wish you well, truly.
Absolutely. I'm so sorry. Thanks for the call. 855-935-TALK. That's our number, 855-935-8255. Give us a holler. We will help you manage your money and your life.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Oh, man, my heart's breaking.
Yeah,
I felt it. I actually went like, oh, Matt. Dude, you're doing awesome. I'm really impressed though that you're
ways talking about this.
Care of the family
I agree. Thinking of others.
Oh man,
hard to know. Hard to know how you'd respond in that situation.
I don't know how I'd respond.
It'd be hard to know.
I can't imagine. 855-935-TALK is our phone number. 855-935-8255. Give us a call. Get a copy of the book, Financial Physics, or
the guidebook.
We'll give you Financial Physics.
We got a few guidebooks that have been very popular. So.
Financial Physics or our Better Retirement Guidebook. Either one. 855-935-TALK. And Dawn, you're next. Welcome to Talking Real Money.
Hey, Dawn.
Yes, hi.
Hey.
Can you hear me?
We hear you fine. How can we help you?
Good. Some years, I'm going to be retiring next year. And in addition to the sources of income I also have several $100,000 in a 401k, and I want to move it out. It's a government managed one, and I want to move it out into something else that's relatively conservative, but I can make a little income off of it, so it's not just quote unquote dead money. And I don't have a clue. I remember you all talking several years ago about a particular fund that you recommended.
Okay, well, let's just ask. First of all, this is great because this just came up in the class I did this morning. Because this is the traditional. I've got this 401k. I want to create some income. I want it to grow a little bit so it doesn't maybe decrease in value too much. What do I do with it? I can tell you some things not to do with it. Put it in a bank, buy a CD. Those would be things I would not do because you're not going to get enough growth. Then the question is...
They told me I have to transfer it to a qualified IRA or I'd pay taxes on the whole thing.
Yeah, well, okay, but you can open an IRA at Charles Schwab.
You can open an IRA at Vanguard.
You don't have to take it to a bank to do that.
Don't take it to a bank.
No, the bank should be a bad place. So then the question really is, and this is one of the mistakes that I talked about at the class, you need to know... To tell us just that, I need to know sort of what rate of return do you need on the money and how much risk / volatility are you willing to accept. You don't have to tell us that today. That's number one. Then number two is, yes, we have many times on this show said if you're going to do this on your own, go to Vanguard and use a two-fund combination, the VT WAX, which is a globally diversified stock portfolio of 8,800 stocks, so that would be the stock part, and then the Vanguard Total Bond Fund, which I believe is VBTLX.
Yes, VBTLX.
All right.
Very good.
Thank you. They changed it up on us. So then you would have the percentage that you want to have in the riskier things like stocks in the VT WAX, and the less risky things that you want to own in bonds in the VBTLX. That's if you want to do it on your own. If you want help, as we just talked to Matt about, you could go to talkingrealmoney.com and look at the list of advisors that we believe in and get 100% fiduciary help from those folks. Is that helpful?
That helps get me started. Thanks. And are you all financial advisors also?
We are. We're one of the people on the list.
Yeah, we did put ourselves on the list because we're good. If we do say so ourselves.
Don?
Thanks for the call, Don. We really appreciate it. 855-935-TALK, our number. But, we don't blow our horn. Because we could, throughout the whole day, just say, call us.
Yeah. It's not very interesting, frankly.
Well, it's not interesting. It's not great radio. And it's not what we're here to do. We're here to
to
educate.
be honest with you, there are others that we put them on the list that we think treat you fairly. They charge reasonably. They believe what we believe, which is really get market returns at low cost and do it in a way that meets those two things I talked about, your need for return and your ability to take risk. Other than that, it doesn't matter. The rest of the stuff, the cheese and the ham and the rest of the stuff that's coming at you.
And by the way, I put the Find Advisors button right at the top of the page.
Right.
Now
Good
it's
idea.
really easy to find.
Good
Just
idea.
go get it. It's there. 855-935-TALK. That's our phone number, 855-935-8255. Come on by. We'd love to help you manage your money better.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information, talkingrealmoney.com.
Reality radio for a really great future. We're talking real money.
Welcome back to Talking Real Money. Talking about your real life and the real things that really do impact you in the future and actually in the present, and may have affected you in the past, and you want to clear those things up and make it better in the future. So here's what you should do, since you only have a couple of weeks to do it, at least that we know of. You know, we never know.
This
Give us a
week
call.
and next week, so that's it.
This week and next.
Yeah.
Give us a call, 855-935-TALK, 855-935-8255. Steve's up next. Steve, welcome to Talking Real Money.
Hello, Steve. Steve?
Steve.
I think Steve, you there?
Wait, let me speak to him in code.
I think he left us.
Oh, I thought he was
got
just
very
clicking.
put off by the cheese trade and decided to move over to the ham side of the radio. So he said, enough of you
do we
hams.
get cheese trays with the show now?
No, cheese trade.
Oh, cheese trade.
No cheese
I was looking
trays.
forward to that that ham and the
Ham and
cheese
cheese,
and
Steve, we
fine
lost
Italian
you. Call us back. We miss you.
hams and salamis.
You forgot to mention that if you call and you ask a question on the show, you get a free copy of your book.
I was relying on you to do that.
Yeah. Why do I always have to be the responsible party here? I want to be the irresponsible one.
Really? Really? No, you don't. You really stink at being the irresponsible one.
I can try
You're
it.
like,
Turn
you
over
really
a new
try,
leaf.
but you end up being so straight-laced.
Turn
It's
over
like,
a new leaf. I'm not too old to change. Come on.
Yeah, you are. Oh yeah. No, you're getting more set in your ways with every passing moment.
Okay, so you brought up
they
something.
pass very quickly.
That's true. When we were talking about the ham and cheese trade, which also led to the
my Italian. I just started my Italian bread fund.
Ukrainian wheat, etc. I mean, in this aspect of, well, the market's had this great run, so I got to find something else. Right? I mean, at the end of the day, that's what people are saying. I don't want to be in stocks because they're
What's the next thing?
Right. That's what they're asking. It's not cheese and it's not ham.
Well, no. Here's the thing. There is no next thing. The problem is you've got all of these people who are involved in the financial services industry in one way, shape, or form, and they want to keep you actively involved in moving your money. So as Eugene Fama says, he said they come up with a new thing every week.
And he'd come up with 5 in 50 years. Okay, the phones are working again. We got Steve back on the line. Steve?
Good job. You fixed that yourself?
Yeah, I did. I held the two wires together and got it going. Hi, Steve. How are you?
Very good.
Good.
Thanks very much for answering questions like this. And I'm not sure if this is a question that you guys are going to want to answer. But I'll toss it at you. So I hear folks like you say that 10,000 baby boomers are retiring every day.
That's not my number. I think that's the government's, but I think that's the last I read, something like that. Yes, sir.
So then we have something that would be something like 300,000 people a month. And then I hear people talk about the jobs report, and the jobs report is saying that we've got 130,000 new jobs. And I don't understand. It seems like we ought to have more jobs than that if we've got that many people retiring.
Oh, in other words, why aren't there more job openings because more people are retiring?
Right.
Yeah, that's
well, okay, there are a couple of things going on. And I really, this is pretty simple demographic stuff. Last year, there were almost 4 million babies born.
They're going to work?
And And no, but those
kids. They got to get out there. I love that.
That's been happening for years
in the United States. Or 4 million.
Yeah.
Okay.
So we've been kind of replacing all those retiring baby boomers, which is one of the reasons.
No, wait. The birth rate's not good enough to do that, I don't think.
Hold on. Let's see.
How many people died last year?
And our birth. We're talking about
the birth rate's low. Yeah. No, I get what you're saying.
I'm not done. I'm not done.
Okay. Please.
That was just the beginning.
Well, we have a long time. Go ahead.
We got immigration.
That's true.
Into this country.
Yeah.
We do have also a real problem right now, as we know, as employers. Yep. The unemployment rate is
lowest
so
in
low.
50 years. 50 years.
It is getting very difficult to find qualified employees.
I'll add something else. That baby boomers are doing very well. So oftentimes when they say retirement, that might mean they're leaving full-time employment, but they might be going part-time. And companies have been somewhat getting more productive in the last 20 years. They've always worked hard at doing that. But I think the productivity, while slowly gaining the last few years, had a dramatic increase with the advent of the internet, electronics, that kind of thing. Mm-hmm. So, but I think those are good questions. I thought he was going to say, hey, now the baby boomers are getting old, they're going to sell all their stocks, market's going to go down. That's what I was waiting for.
I've heard that one.
Yeah.
By the way, that birth rate is about 10,000 babies a day.
10 a day.
A day.
Wow.
About 10,000. That's about the number of people retiring.
Getting close. Get those kids to work. Let's go. Come on.
And then you got a few immigrants. You know, it works out. 855-935-TALK. Give us a call.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, talkingrealmoney.com.
For your real life and real future, Tom and Don are talking real money.
Getting the money right is so critical to your future. You've got to get some education, some information, some knowledge. Get your questions answered. It's so hard to find someone. It really is. Think about it for a minute. To whom can you go and be pretty confident you're going to get an honest answer to your financial questions? And they're
educated and honest, by the way, because you can get an honest answer from a family member, but they might not know.
Right. Yeah. Honest and knowledgeable. Yeah. Good point.
Yeah. So
good point. So give us a call. 855-935-TALK. 855-935-8255.
Giving away
8255. Get a copy of
Don's
my book.
Yeah.
Financial Physics.
We haven't done this in a while.
How money and investing really work.
Yeah, I think it's a good book. Great primer on the whole thing.
How money and investing really work.
Don't get me going there. You know where I'm headed if we do that. So anyway, call us. We'll answer your
not
questions.
L to the OG.
I know. I wasn't going to do it because you asked me not to, so I'm letting it go.
I watched it.
Yeah, what'd you think?
And out of context, it makes no sense.
Okay, well then you need to get it in context. So.
Okay, Tom, I'm turning
that rap into the Talking Real Money. That's going to be our new theme song. I love it.
Dude,
I love it.
Really don't like rap.
It's not always up to you. It's not always about you. So
yes, it is. It is now. This is all about me.
This is
all about me.
We've reached that point. Okay, so
I found my microphone, and I am all powerful.
We were going to spend a minute talking about the big news in the industry this week. I mean, this is gigantic.
It was all
got a headline everywhere. Drove the stock price down by 10%.
Yeah.
We're talking about Charles Schwab.
Charles Schwab announced that they weren't going to charge for a commission or fee for stock or ETF transactions.
Trade your little heart away.
Trade your heart away. And now, everybody said, "Wow, that's amazing!"
They are such nice people. They're nice people. And remember, they're nice
giving
too.
This away.
Yeah.
How can they afford to do that?
And then our friend Jason Zweig, who I still think, if you're going to read one column a week, that would be the one to read. He writes Saturday mornings in the Wall Street Journal. He pointed out that Schwab, pretty smart bunch of people there. And
altruism.
Yeah, they don't really care that much about the trading because what they're doing is they're more of a bank. That's the word he used. I think that's true, by the way. You're setting your money there. And for those of you that have money in cash,
in what they call a sweep
fund, in the sweep account, they are paying you 0.5%, which actually is more than what the bank's giving you today. So it's actually good.
On like a savings account
whatever
or
it is.
a checking account.
Checking account.
Yeah, right.
And then they take that money and then they invest it and they're making 2.
Actually, what they're doing is they're lending it out.
They're lending it out. They're making 2. Right, right. It's very quick.
You can lend money for a day in the United States and get 2%.
That's right. There's people who do that.
Get 2% annualized. This is the exact same thing that allow you. You know, you think, well, my bank gives me free checking.
Mm-hmm.
How do they make any money?
Yeah,
they lend the money in your checking account out to others just for the day at 2%.
And this is another reason.
The same game.
When I read it, I think we don't, as an organization, nor as journalists, we've always said, cash really shouldn't be viewed as a asset class. In other words, it's not something you hold waiting for the price of Boeing to go below 300 or waiting, whatever it is. That's a fool's errand. You really shouldn't hold cash. It should really be stocks or bonds. But in this case, the example, I think, is just very clear that would be a bad decision.
That is a huge, when you think about that for a minute, I could pay you, the listener, 0.5%, and you're getting it. Trillions of dollars are sitting in these accounts.
Yep.
And I could go out and lend it to someone else for just a little bit for 4 times what I'm paying you. That's great business. But here's what you can do to fight back. You should have that sweep put into a money market fund.
Which they will do.
The
and default is the
almost
other.
2%.
I know. But you got to be paying attention. You got to be efficient. You got to be on it. And most people are not. They count on that.
That's a lot of money.
It is. I agree.
Particularly for Schwab, when it's a trillion here and a trillion there, and
sometimes
pretty soon you're talking real money.
Indeed. So these are, and they're small things, right? I mean, people think, well, that's not a big deal. Yeah, it is kind of a big deal.
And that's a point that we try to make regularly on the show and in our classes. It's about a little here and a little there.
Yep.
We are not talking about any revolutionary idea to make you rich like that overnight.
Yeah. Well, except for the cheese and ham thing.
Well,
that might be making you fat like that, but okay. Yeah. Well, I don't know. I guess the ham's okay.
You're right. Yep, I just checked.
I'm checking.
Yeah, there's a little extra girth.
So what
that
the point
was
is,
darn good ham and cheese.
I think the point always is, yes, the little things do matter, right? Mm-hmm. Number 2, I see a lot of portfolios come into the office where there's 10, 12% in cash because people think, I got to have cash. Why?
In a sweep account.
Yep. And there's something like $10 trillion in bank accounts that are paying 0.09 on average today. It's not. It's just you're just giving your money to others. Basically, at the end of the day, that's what you're doing with your permission.
And here's the thing: if you could, with your total investment portfolio, if you could find a way to add a return 1.5% per year to your returns.
Huge difference.
You would leap at the opportunity. You would be kissing your broker's feet. Oh, an extra 1.5%.
Warren Buffett would be at your door. I mean, no, kidding about the last part. But
you could do this without breaking a sweat. Mm-hmm. Just go to your broker, go to your mutual fund, go to your bank, even your bank, and say, here's what I want to do. I want to get that money. I want to get all but just a little bit out of checking. Then I want to put it in a money market account, and I want that linked to my checking account.
Bingo.
So that when my checking account goes dry, you draw from my money market account, which is earning 1 point something.
Yeah. This is always
just too easy.
Yeah, and this is another reason that, and I know you and I have gone back and forth on this a little bit, that I use the Vanguard short-term investment grade bond fund, which is still yielding 2.3 or something.
That's Tom's no guts, no glory money market account.
Which, as you said earlier, I'm usually not in that category. But in this case, I am. By the way, the reason I've trusted that fund for 20-odd years is our friend Paul Merriman told me about it like 22 years ago. So,
yeah, but Paul also says just build a portfolio out of short-term value stocks. I mean, small-cap value stocks.
You would have been okay. You would have been okay.
You would have been okay, but boy, what was the fund? What's the fund you're in? I want to look it up.
A VFSTX, Vanguard short-term investment grade bond fund. Sure.
Before we go into a break,
I think it's still yielding 2.3 or something. But did it have a bad time in 2008, 2009? Lost a little bit of money. Yeah.
Oh, you lost money last year.
Yeah, last year it went down too.
Oh, that's just sad. I'm kidding.
You're going to make me cry or something now?
What's the current yield on that thing?
I thought it was 2.3.
2.2.
Yeah.
2.22.
Yeah. So it's just, again, it's a little thing, but over time could make a difference. Just saying.
It makes a huge difference.
Just saying, instead of getting 0.09, which is what you're mostly getting in cash.
Paying lower fees means a higher return.
Diversify. Keep your fees low. Keep your fees low. Keep your fees low. You'll be okay.
Bill Sharp.
There you go. That worked out.
855-935-TALK. Oh, by the way, we have bonus time today for you. We are sticking around until 2:30 Pacific time. So give us a call. 855-935-TALK. It's free. It's easy, and you get a book.
Tom and Don are talking real money.
Tom and I believe in helping everybody become a better investor. That's why we offer lots of free knowledge at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
All right, I'm going to come right out and say it here at the end of the hour. If you are out seeking 100% fiduciary advice on your portfolio, we do that at our firm. Tom and I started it 10 years ago in October. It's called Vestory. You can call us at 800-386-3004 and talk with an advisor, no obligation, or you can visit us online and set up an appointment at vestory.com. So if you want to talk with a real live fiduciary advisor, go to vestory.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?